Hey, Johnnie Roberts, how are you doing today, sir?
Doing good, Mike. How are you doing?
I'm fantastic. Life is good, and I'm super excited to be here with you for another episode of your podcast. And we just got came off the series with Heather Schreiber, talking about taxes and different things that affect retirement. And that was a great mini series. Our listeners, if you didn't hear that whole series, go back and listen to it because it was really, really good. Heather's an expert at all things retirement, taxes, Social Security things, and it was a good series. What I want to talk about, Johnny, is because she hit something that really made me start thinking about taxes and retirement. How do we mitigate taxes? How can we pay fewer taxes? And that kind of got me in the idea, and I know we've talked a little bit about where can life insurance play into this as far as taxes and some other benefits as part of a good retirement plan.
Yeah, man. Going along with the tax concept we've been doing, life insurance is one of those ways that flows right perfectly in with that. It's one of the few things out there that aren't taxed. So the death benefits, some of the
Uh-huh.
income streams you can get from life insurance aren't taxed. And so um, it is one of those tools that can be in someone's toolbox that once again, boom, might be a perfect fit for you
Hmm.
that man, there's a tax-free revenue I can get, a tax-free legacy I can leave to kids, grandkids, things like that. People don't think, oh, I'm just leave them some money. Well, that money may be taxable and it's not dollar for dollar value like it is life insurance, though. If
Yeah.
it's $100,000 policy, it's $100,000 tax free. You know what I'm
Yeah.
saying? So if you want to leave money to kids or grandkids, speaking of grandkids, I've got two more coming, Mike.
Do you?
March and April. Now I
Congratulations.
know you're my friend. Now
Yeah.
tell everybody you got some good news too or not.
I do have some good news, Johnny. As you know, yesterday my first grandchild was born, Ava Lee, and she's just beautiful, and we're super
There we
excited.
go. All
Um,
right. It's about time you have one with that gray hair.
that's
Perfect.
right, exactly.
No, that's cool. But
Yeah.
grandkids, when you start having them, man, you start thinking about legacy,
Yeah.
right? So many clients we meet with, it's not that they don't love their kids, but so many of them say, I want to leave something for my grandkids for
Yeah.
college or whatever. Not that they skip over their kids, but it's almost cute because it's like those grandkids just consume you, man. They're so awesome. And but that's one of the avenues life
Yeah.
insurance can be used for, as well as
Yeah.
so many other tax advantage things. So
Right.
yes, you're right.
Well, and we might do a whole nother episode around life insurance for saving for college because I know it can be used as that vehicle. I know it can be used to. I mean, we could create a life insurance plan on Ava Lee. She just got born October 1st, right? And by the time she would hit retirement, Johnny, she'd have multiple millions of dollars there that she could take out tax free. And let's pause there because I think so many times we say that, but we don't understand why it's that way, and it's written into the tax code, right? And so unpack a little bit about that tax free aspect of the distributions coming from life insurance, and then how does that play into maybe part of a retirement plan?
Excuse me. So yeah, as you're paying into a premium on certain types of policies, generally permanent type insurance or universal life insurance, that kind of things. Of course, if you've had life insurance in the past, they build a thing called the cash value.
Mm-hmm.
So those cash values are treated within the policy as like tax-free loans and things like that you can utilize for yourself to draw money out of to supplement income. Now, back in the day, the old whole life policies from 1960 or 70 or whatever, they really weren't designed for what these new ones are designed for.
Mm-hmm.
These newer products in the last years that have come out now are whole different animals, and the cash value you can build up, the way you can maneuver and work with it to provide you that tax-free potential stream of supplemental income is phenomenal. So you're able to basically kind of do policy loans on your own money that is tax-free paid to you.
Mm-hmm.
And whenever you pass away, whatever benefits still left in that policy, minus the loan, is going to go to your beneficiaries.
Yeah.
But you could set these policies up, Mike, to where, I mean, you have some of these where you
Yes.
can run these things where the income's going to run for 20 years, 30 years, whatever it is, you can design the plan around that. Very flexible.
Yeah.
And man, they provide a lot more benefits than just a death benefit now. And I'm talking
Well,
good cash value.
they really do, and I know probably in the next episode we're going to talk about some of the additional ways life insurance policies that are properly structured can help pay for maybe long-term care and things of that nature. We'll talk about that probably in the next episode because I know that's a big deal. But I think Johnny, I think life insurance has a bad rap. I really do. Nobody really wants to buy it. But what I have found over the last 10 years of educating myself and understanding, basically, and I'll let you do it because you're the guru, but the two different big types of insurance, you got term and whole and permanent. But and there's a place for both of those. So unpack a little bit about that of the types. When should you use one? When should you use the other? And then as you're looking at retirement planning, how does that fit into some of the other components of a really good, solid retirement plan?
Yeah, so there's term, which basically is temporary insurance, right? So
Mhm,
term is insurance for a term of time. That's all it
mhm,
means. It can be 20 years, 30 years, whatever, 10 years. And so I have a insurance need, maybe it's a mortgage or
mhm.
if I die before my working years are over, I want to make sure it replaces income, whatever. I have a purpose for that amount of insurance. It's $500,000. I need it for the next 20 years.
Right,
Okay, that could be a term policy. Your permanent insurance is this is long-term stuff. And now we can correlate that not only with just paying for the funeral. I mean, we're not talking just about that, which is fine if you have that, but now we can plan out right and say, okay, this is also going to be retirement funding.
right.
So um, you can start those. You don't think of it as I got to wait till I'm 60 to start them. No, you can start them really, really young and begin to fund that and let that thing grow for years and years and years for that tax-free wealth. But so there's term, and then there's permanent, which just means it's there forever.
Yep,
Okay. And
yep.
there's kind of two general concepts of permanent insurance. There's everyone's heard of whole life insurance, right? You see the commercials on TV. That's what whole life insurance. That's what that is. And then there's also a thing called universal life insurance, which is more of a flexible
Mhm,
type policy. So
mhm.
that kind of combines a little bit of term and whole life. But that's so you got term, traditional whole life, and then you got this universal life kind of in the middle,
Yeah.
which can be adjusted to different things. But once again, term, man, I might need that to cover my mortgage. Whole life, maybe retirement, vital expenses, whatever.
Yeah. So like for me, and I'll be a little transparent. I've got a term policy. I think it's a 20-year term because I've got teenagers in the house. And if something happens to me, I want to make sure my wife has enough money to take care of the girls, get them through school, get them through college, all of that. But that's a limited term. But I also have permanent life insurance that's going out till I think it's 105 or something like that. I mean, it's a long time. I plan to live for a long time, Johnny,
Yes,
because
you
I
should.
I need to project out and have income in retirement. So I'm looking at both. The other analogy, and tell me if this is accurate. Somebody told me a long time ago that term insurance is kind of like renting a house or apartment, and whole or permanent life insurance is more like buying a house because you're building up equity in your house, which is that cash value. That was a concept to me that it's like, oh, I understand renting and buying. Very similar at a high level, those two. Is that kind of
At
fair?
the basic level, that's kind of the
Yeah,
way you think of it. At the very base of like
yeah.
what's permanent, what's term, right. I have a
You get
policy that's simple. The
yeah.
other one here, I own. I
Mhm.
control what's going to happen with it. And so anytime you can control something in your life,
Yeah,
generally the better off it is for you, right?
yeah.
I can make the decisions on how long I want this for, when I want to stop it, what I want to do with it. Term insurance is
It's there.
that's it. 20
Yeah.
years, then I got to
It's
find something else.
yeah. It's
If
it's
that's
it's
all you have. So
right.
I'm just like you, being transparent. I do have term insurance. My wife does, but we've also developed this retirement planning policy within our structure too, just because of the advantages of tax free
Yeah.
benefits on it, as well as the death benefit that's going to be there forever.
And man, and we coming off of the episodes we just did with Heather around taxes. So many people as you work with them, Johnny, taxes are one of the biggest things you have to consider in retirement. And all of the TV commercials, right? Well, what's your number? And follow the green line and all this. Everybody says you got to have a big nest egg in order to retire. But what they don't tell you is when you start taking money out of that nest egg, Uncle Sam's there as your number one beneficiary saying, oh, give me my money now because you've deferred it, without paying taxes. Life insurance helps you mitigate that because all of the money you can receive from your insurance distributions are tax free. So that it really helps you when you have a properly structured retirement plan. Insurance plays a part of that, right?
Absolutely. And so with the new policies, they're kind of like guidelines that we figure out for clients that says, okay, as long as you don't fund it this much, everything in there's going to be tax free. And so you
Hmm.
structure the policy around your budget and what that is. So you know, man, all these funds I'm going to have on this now are going to be tax free benefits if I operate this thing properly. And
Right.
that's such a big deal because once again, I always tell people, man, look for the dollar amount versus the dollar value. And
Mm,
life insurance is one of those tools that whatever it says it is
that,
it,
that's what it
you
is.
know, whereas other vehicles, it says I have this, but if I take all that money, I'm going to get this, right?
Right.
And so have some things mixed up in your retirement that is over here.
Yeah.
It is what it says I have. And you're going to have some things over here still, which is fine, but diversify it up a little bit and
Yeah.
give life insurance maybe a look for that opportunity for yourself.
Yeah, it really is. And we're going to come back in the next episode and dive in a little bit deeper because this was a really good kind of primer on life insurance and the two types, why you need to at least consider having it as part of your retirement plan because of the tax benefits. But next episode, Johnny, I want to talk about the aspects of life insurance and how you can leverage it to help pay for some long-term care and some other things that might be out there that I know a lot of people are going to deal with because that's really, really it can be very expensive. But when you structure a policy right, it can help pay for that. So that's what I want to talk about in next step.
Yes,
Are you up for
that's so
that?
true. I'm Mike, man. We are financial retirement insurance nerds, so this stuff is exciting.
I
So
love it.
everybody stay awake. We'll be back next time for sure.
That's right, Johnny. Thanks for being here. If you guys have any questions, reach out to Johnny at his website, and it's newheights.life. Get a free copy of his book and have a conversation with him around all of this. But we're going to come back next time with another fantastic episode around how to retire at New Heights. Johnny, take care, buddy. We'll talk to you soon.
You too, Mike. Thanks.